Hi everyone, I'm Paul and welcome to my review of lesson 37 and 38 of ICT's 2022 Mentorship Program. I know that I said in the last video that it was going to be the last of the 2-for-1 episodes, but I managed to be able to condense the two lessons down into one video, and it seems that most people enjoy having this condensed format, so here we go. In today's video, once again, we're going to be looking at two of ICT's trades or two setups from the 2nd of June, which is just before non-farm payroll or NFP, and then another one on the 7th of June 2022. But before we do, if you enjoyed today's video, it would be great if you could like it because that's going to help other people to find it. And if you haven't already, make sure you subscribe to my channel and turn on notifications so that you never miss any updates. These are quick, easy, and free ways for you to support my channel. Lastly, if you'd like to hear more from me and join a community of like-minded traders, then make sure you click the link in the description, which allows you to subscribe to my free weekly newsletter and to join our Discord. Now that that's out of the way, let's jump into today's video. Today's video is a review of lesson 37 and 38 of ICT's 2022 Mentorship Program. And in today's video, as I mentioned earlier, we're going to be looking at two trades that ICT set out in his two lessons, and that's one in the PM session on the 2nd of June, so this is the one that's just before non-farm payrolls, and then another one which is on the 7th of June 2022, which is also in the PM session. So we'll start today's video by looking at the daily chart on the ES or the S&P 500. And if we review the recent price action, you can see we have this swing low down here, which has broken the sell side liquidity or relative equal lows down here. The market's then traded higher. We've taken out the buy side liquidity here at this swing high. We've traded through that, painted a swing high here, and you can see that's created this buy side liquidity. In the process of this expansion upwards, we've had these imbalances and this bullish fair value gap which has been created here, and the market's now traded back down into that. So expectation from here is that we're probably going to reach to this buy side liquidity here, and then if we get an extension or an acceleration, that we then start to look to reach towards this buy side liquidity or these relative equal highs, which is confluent with this bearish fair value gap just here. Now as traders, we're always looking to try and increase the probability of success in our trades, and the way we do that is by stacking confluence. And what I mean by stacking confluence is we're effectively layering on top of each other different factors which all indicate the same thing. And so in this example, some of the confluent factors we'd be already looking at would be this break in market structure here. So taking out this buy side liquidity would be showing that we've got a shift in market structure that's bullish. So we've had this downward trend, and we now have the first sort of signals that we've got a shift in market structure towards one that's bullish. We have these imbalances which have been created here as we've had this expansion to the upside. So we have this displacement higher, we filled in this volume imbalance, and we've created this bullish fair value gap just here. We've created this buy side liquidity here, and we've now gone back into this bullish fair value gap. So we've filled in this fair value gap, and so these all point towards an expansion towards the upside. And so one of the things we're going to do in today's video is introduce the concept of a breaker block. So in this case, a bullish breaker block, which is going to add another layer of confluence to this particular setup that we're looking at today. So you'll recall from the previous lessons, we're actually looking at this up close candle here. And when we were talking about this candle at the time, the market was obviously back here, and we were looking at this as a bearish order block. Now you'll recall your bearish order block is an up close candle before we have a down move that has an imbalance in it. And so what we were looking for at the time was for the market to trade potentially into that before reversing. But what we said is that once we got to the mean threshold, which was that halfway mark, so right in the middle of that bearish order block, is that once we got to that halfway mark, is that that would suggest that we'll have a continuation to the upside, and that's exactly what we got. And so what you could call this is effectively a failed order block. And that's another way of really looking at what a bearish breaker or what a breaker block is. It's essentially a failed order block. So now that that order block's been broken, we're going to view it as a bullish breaker, and we're going to go into a little bit more detail about that now. And so our bullish breaker pattern is one where we have a low, a high, and then a lower low which is broken. So you can see this pattern here is actually broken. So we have our low, a high, a lower low, and then the move that we get subsequent to that actually breaks this pattern. So we don't get a continuation. We now get a higher high, and then we trade back down below this swing high here. So if we look across back to our chart, you can see that's exactly what's happened. So we have our low painted here. So we have this sell side liquidity created here. We get a high, we then get a lower low. So this low is lower than this low, and this move then breaks that swing high just there. So this takes this particular up close candle from being a bearish order block and flips it into becoming a bullish breaker block. And so you can see now that we have a bullish buy, so we're looking for higher prices. We have this bullish fair value gap just here, and you can see how that is now confluent with this bullish breaker block we have just here. And you'll often see, if you're looking at crypto Twitter or at people on YouTube who are using ICT's concepts, is this is sometimes called a unicorn setup, where you have a confluent fair value gap and a breaker block together, and this tends to be a very high probability setup. So we're obviously sitting on the 1st of June now. So let's roll the market forward and see if our hypothesis would have been correct, that we were going to be getting higher prices. So you can see we roll forward, and that's exactly what we get. We didn't quite reach the buy side liquidity in this particular move, but we did reach for it. So that's just all we're really trying to do, is predict the direction of where price is going to be going. So that's exactly what we got. So let's start to zoom in now and start to frame up our trade that we would have been taking on the 2nd of June, just before non-farm payroll. But before we jump into the lower time frame, it's a good time to remember that ICT actually doesn't recommend trading before or on non-farm payroll. So as he says, this is the perfect opportunity to study, and so really that's what we're doing in this example. So we're on our 1 hour chart now, and this session is really a perfect example of the application of the power of 3. So you'll recall from a lot of our previous lessons, we've talked about the power of 3, and that's when we have accumulation, manipulation, and distribution. And so firstly, we'll just orientate ourselves on the chart. So you recall from the daily chart, we're already sitting inside that bullish fair value gap, and we were looking for price to draw towards that buy side liquidity high. So that's this level here. So that's residing above that swing high that we painted on the daily. And you can see the market's traded down into this bullish fair value gap. You can see we've created this buy side liquidity relative equal highs as we've traded lower. We get a big movement downwards. We take out this sell side liquidity here as we come into this bullish fair value gap. You can see we've left these imbalances here. There's obviously a trade back up into that bearish fair value gap just here before we come back into the bullish fair value gap again. And as we start to trade into the midnight open, so we're coming into the London session, you can see that the market trades higher. We don't quite take out this buy side liquidity before we trade down as we come into the 8:30 open and then the 9:30 open for the equities open, before we come and we trade right down to the very base of this bullish fair value gap. You can see we don't take out the sell side liquidity here before the market then races higher. You can see we take out the buy side liquidity, we take out these relative equal highs here, and we don't quite reach the buy side liquidity here, but you can see price is reaching for that. So this is really our power of 3 in action. And so what we see here is we have our accumulation. So this is smart money accumulating long positions. We then get a manipulation lower. And so this is where smart money is still going to be accumulating those long positions, because they're obviously using all of those sell stops here to basically create that pool of liquidity for them. So you have all these sell orders coming into the market, smart money's buying those, so they're the counterparty to those sell stops, and then that allows them to get set, and so then the market drives higher, and then they will be distributing at the highs or where there's buy side liquidity. So if we zoom into our 15-minute chart, we can just obviously see this pattern in more detail. And just for, I guess, clarification, if we wanted to draw this out, this is really what it's going to look like in terms of from the candle pattern. So we have our bullish candle here, and if we want to think about what the power of 3 looks like as we are unfolding during the day, so you can see we have our midnight open here, and so that's this position here on the candle. So we have accumulation of long positions by smart money happening between the open and then the low. So this is what we get here. This is our opening price. You can see we get accumulation, we get manipulation down, so that then creates the low of the day. And so this is, the engineering of those short stops being triggered. So this is creating that pool of liquidity where smart money can then buy those stops. So this is occurring down here. So we have accumulation between the high and the low. We get the manipulation lower. Then the market trades higher over the course of the day. And then between the close and then the high, so this is what we're getting just here, this is where we get distribution. So smart money at buy side liquidity is then looking to exit those positions that were engineered down here. So these are long positions that they engineered down here, and they'll obviously be looking at buy side liquidity. So in this case, what they're looking for is buy stops, which they can then sell into, which will then allow them to exit their position. And so this day is really a perfect example of the power of three in action. So we've zoomed into the 5-minute chart now, and we're going to start focusing specifically on the setup that we're looking at going into the PM session that ICT both tweeted about and then talked about in lesson 37. So you can see this is our midnight open here, and if we draw that across, and this is that accumulation and manipulation that we were talking about when we're looking at the 1 hour and 15-minute time frames before we started to get that move higher. And this is that buy side liquidity just up here that we were talking about on the daily chart. And then as we've zoomed in now, you can see that move lower that we got as we came into that bullish fair value gap from the daily chart has created all of this inefficiency here. And we actually have this imbalance here, so this bearish fair value gap. And so this is the target that ICT is talking about for the PM session. So he's expecting price to drift up into this zone, and he tweets that around about here. So his expectation is that post lunch, there'd be the opportunity to take a long trade for the market to then trade up into this bearish fair value gap later on in the session. Now that's not actually what happens at this moment when he's here. There's actually the opportunity for a long setup there, and then the market immediately trades into that fair value gap, that bearish fair value gap just before lunch. And you can see as we go into lunch, it immediately starts to pull back afterwards. And so the specific piece of price action we're going to be looking at is this range just here. So we're past all the 8:30 and 9:30 open, and you can see the market has then traded back above this midnight open level. And you can see what we're looking at is this order block just here. And we have then this displacement higher here. So we have this energetic move higher here. The market then retraces back into this bullish fair value gap here, and then it immediately trades up to the target that ICT was talking about here. So in terms of our dealing range, we're looking at this dealing range from here to here, and you can see the market then trades back. Our equilibrium would have been around here, and so we obviously want to be buying in a discount, which is that fair value gap just here. Now the important thing to note is that ICT actually didn't take these trades here. He's just illuminating them, I guess, for study purposes. And what he talks about in this particular part of the video is really the power of journaling, and then why we journal, and why backtesting is also important. So I know from my experience personally, I find this process quite helpful. And what it does is it helps to imprint, the patterns of this into your brain. And so when you see them on the chart after you've marked them up many, many times in the past, when you start to see them live, they just appear because you've just trained your mind to see them before. And so I think what's very important about this is to, mark these up as if you'd taken them perfectly, and you don't really pass any judgment on the trades here or there. You're really just recording what you've seen. And so what that does is it starts to build up, muscle memory, if you like. So you just start to see the same patterns again, and you start to understand that these do happen again and again, and then you'll just start to see them appear when you're expecting them to appear, and then you obviously get the outcomes that you expect. So I think that's a really powerful learning tool, and something that people don't do enough of. And I know that in my experience, doing this has made a big difference in seeing these patterns and really amazingly just being able to look at the chart and instantly see them. So it does really make a big difference, and it's something that I recommend everyone should do. And how you do your journaling is really up to you. There's probably a couple of ways you could do it. I know some people like to keep, physical documents, so they might print them and write notes. There's other people who will use, a more digital medium. They may take screenshots, put them into a Word document or a PDF. And then there's other tools like Notion, which is what I use because I just find it very easy to automate that process. And then you can start to build statistics and things like that off the back of it. So it's really up to you what you choose. I think just as long as you do it, that's really the main thing. So we're back on our daily chart for the review of lesson 38 now, and we're still looking at the ES or the S&P. This time we're looking at a trade on the 7th. So you can see not much has really changed. We've consolidated in this area and we've just dipped down between, say the high of this candle. So you can see we took that out here. We've traded back down into this fair value gap, this bullish fair value gap, and we're in it again. We've now had effectively an inside day here. And so the question is well, what's the draw on liquidity based on the price action we're looking at the moment? So we still have our bullish breaker in effect here. So that's reinforcing this bullish fair value gap that we have here. And so our expectation or our draw on liquidity still is really going to be this buy side liquidity at this swing high just here. So we still have a bullish bias going into the 7th, and we're looking for price to draw into this level. And it really hasn't changed from the beginning of the video, where if we get continuation or an extension, an acceleration in price, we'd be looking for price to draw towards this buy side liquidity, relative equal highs, and that's confluent with this bearish fair value gap here. So we'd expect that to be quite a strong draw on liquidity, but we'd first need to see price draw towards this buy side liquidity first. So if we just click the market forward now, we'll just see what happened and see if our anticipation of the bias was correct. Okay, so we can see that clicking forward, we didn't really get a draw right up to that buy side liquidity that we expected. The direction was correct, we just didn't get quite the extension that we're looking for. And you can see we've wicked right down into the base of this fair value gap just here. So we've almost completely filled or rebalanced that imbalance again. So you can see it's been filled in a number of times now, but we haven't quite reached this buy side liquidity yet, even though we did draw into that. So from here, probably expect that we're not going to start drawing up towards this level, just given that we've had a couple of attempts now. We've completely rebalanced this zone. So it's possible that the draw on liquidity next would be to the downside. But for now, let's look into that session on the 7th and start to frame up the trade that ICT took in that PM part of the session. So zooming into our 1 hour chart now, and the thing that hopefully immediately jumps out is we have almost a carbon copy of the setup that we were looking at when we were looking at the review of lesson 37. So you can see our power of 3 in effect again. So we have our midnight open here. You can see the market is accumulating these long positions. We get our manipulation lower, the market trades higher, and then we're distributing higher in the day, so between the high of the day and the close. So this is again our classic power of 3 in effect. So we have accumulation, manipulation, and distribution. So exactly the same as what we talked about in lesson 37's review. And very similar to what we saw in lesson 37. So you can see on the previous day, so on the 6th, we had this buy side liquidity created here. The market trades lower. We take out that sell side liquidity. We come into that bullish fair value gap from the daily. You can see we have our midnight open here. As we come into the session on the 7th, we trade above that. We go lower. So this is our manipulation. We come down to the base of that fair value gap again. We don't take out this sell side liquidity relative equal lows before the market starts to trade higher. And you can see the market then eventually terminates as we go into this bearish order block just up here at the end of that range. So if we zoom in now to the 15-minute chart, we can start to see some of these long setups actually taking shape as we've gone down to this lower time frame. So if we just orientate ourselves on the chart, we have our midnight open here, New York time. There's our midnight open extended out in time just here. we have our 8:30 open and our equities open. So again, we've got our power of three in effect. So we have accumulation and manipulation, and you can see that price actually goes below the midnight open, the 8:30 and the equities open. So we know that we're in a deep discount. So the market's really cheap at this point. You can see as we come into this level, we've obviously taken out the sell side liquidity as we've come lower. We get a reaction as we come into that 9:30 equities open. You can see we get our displacement. So this energetic move upwards. We get our break in market structure, and even breaks it here. And you can see in the process of that expansion higher, we get a fair value gap, a bullish fair value gap created on this 15-minute chart. The market trades back into that. So there's two opportunities there before the market then trades higher. You can see we take out this buy side liquidity here and over here. The market then comes back into this fair value gap that's formed here. So again, if we mark our dealing range from here to here, our equilibrium would be around here. So we've come back into a discount again. The market's traded into this a number of times as we've consolidated over lunch. And you can see as we come into the PM session, then the market then starts to accelerate away, reaching for that buy side liquidity that we marked out on the daily chart up here. So we've zoomed into our 5-minute chart now. And just remember, we're looking at actually taking a long trade in the PM session. And so what ICT talks about a lot in lesson 38 is that the price action we've seen in that morning part of the session is all priming the market to reach that previous day high. So to reach for that previous day high in terms of being the draw and liquidity. And we know this because we've been talking about how we have the power of three in effect. So we know we've had the low of the day created at the open, and we've already seen, that manipulation, the accumulation as we've come out of that New York open, as we've come into the 8:30 and 9:30 open, the market's gone into a deep discount as the market's then reacted to those levels. And this is down here. We have that bullish fair value gap that was created on the 15-minute chart. And you can see we get another displacement here, even though we actually don't get a bullish fair value gap set up on this 5-minute chart. We then have a consolidation as we come above that midnight open. We get another acceleration, taking out all that buy side liquidity, and we have these imbalances created here. Now remember, we also have a bullish fair value gap on the 15-minute chart here. As we come into that lunch session, we're expecting a consolidation or a retracement if we're expecting higher prices in the PM session, and that's exactly what we get. So you can see as we come into the lunch session, so around here, the market starts to retrace. And if we run our fib from here to here, we create our dealing range. We would have our 50% level around here. And then we have our bullish fair value gap here on this 5-minute chart just down here, which again is confluent with that bullish fair value gap on the 15-minute chart. We get that consolidation just here as we come through lunch. And you can see in that sort of final movement, if you like, what we're really looking for is we get that consolidation, we get a swing low painted just here. The market comes down and it sweeps that sell side liquidity one more time. So taking out all of those stops, we trade into that fair value gap. Remember, we have a confluent fair value gap here, and you can see the market then reacts instantly to that. We trade. Our first target is going to be this buy side liquidity here. And then our ultimate target is going to be that previous day's high here. But we're obviously always aware that we may not reach that. So we obviously want to pay the trader, as ICT says, first. So that's why this is our first point of interest. And we're going to be looking at the price action as we go through the rest of the session, and then be making a decision on whether we take additional profits, what we do with our stops, and if we do indeed try and reach for that previous day high up here. And so before we move on, I think the really important thing to emphasize is this period just after lunch or during lunch, because that's really, I think, the meat and potatoes of this whole PM session setup. So we have the consolidation, we have a low that's created during that lunch session. We then have an additional sweep of that low, so we take out that sell side liquidity that's been created over the lunch session. So we need those lows of lunch to be swept, and that's really our trigger to go long and then go into the trade. And as I said, we start to target this buy side liquidity here for our first point of interest. And so just to finish up, we'll have a look at the trades that ICT actually took in this PM part of the session. So you can see he bought right here. So on this candle, this was what he was looking for. This candle broke this low here, so he immediately then bought that because that's obviously in this zone that he's looking to get long. We've got that confluent fair value gap on the 15-minute and the 5-minute. We've swept the lows of lunch, and that's our signal to go long. The market's then traded higher. You can see we've traded into these bearish fair value gaps, which we've painted on the way down. So ICT's taken some partial profits there. You'll recall that this was our sort of first point of interest we were looking at. He's taken some additional partials there. And then as the market's gone through that buy side liquidity, we've traded up into this zone here. He's expecting that these down close candles are going to act as support. And you can see as we come through here, we actually don't get that support that we're looking for, and the market trades through that, falls through that, and he then closes out the balance of his position here. Obviously the market then continues to trade higher, but based on this price action here, that was where he decided to liquidate the last of that position. Thanks for watching my review of lesson 37 and 38 of ICT's 2022 mentorship program. Today's video was another 2-for-1 special, and we introduced the concept of the breaker block to the mentorship program for the first time. I hope you found that interesting, and I hope it promoted you to go and have a look at that in some more detail. I hope these trade examples continue to help you with your learning as you progress through the mentorship program. If you did enjoy the video, I'd really appreciate it if you could give it a like, because that helps other people to find it. And if you enjoyed this content and you'd like to see more like it, then make sure you subscribe to my channel and turn on notifications so that you never miss an update. And lastly, remember, if you'd like to hear more from me and join a community of like-minded traders, then check out the link in the description, which lets you subscribe to my free weekly newsletter and to join our Discord. Thanks for watching, and I hope to see you next time.